Are you a business owner or a professional over the age of 40 who's been working hard, building their business over the last decade or so, who's finally in a position that there is excess earnings in their corporation that you can set those aside for future retirement income? You know, many business owners have a shortened period of time to accumulate funds for retirement as they've been focusing on reinvesting in their business during the formative stages of their operations. Are you aware that there's a program called the Individual Pension Plan that provides a far greater opportunity than RRSPs, or Registered Retirement Savings Plans, for accumulating wealth for retirement? By the end of this video, I will share with you how an individual pension plan could provide you with a meaningful and predictable retirement income, lower corporate taxes, protect you from market risk, while building up a greater income than you could build by using registered retirement savings plans. I'm Rick Goldring of the Bay West Group, and for the most insightful information on wealth and risk management strategies for business owners, including doctors and dentists, subscribe to the Goldring Financial Leadership channel and hit the notifications bell to be notified when we upload new videos. One of the most significant challenges for business owners is accumulating funds for retirement, as often so much of the wealth of the business owner is tied up in the business. And relying solely on selling your business at a future date to generate retirement income is a very risky strategy for many. Between now and retirement, the value of the business can change dramatically based on many different variables. Now, an individual pension plan provides the business owner the opportunity to allocate excess corporate earnings for the future retirement income. This video will simply provide a very high-level view of the advantages of an individual pension plan. The best way to determine if an individual pension plan makes sense in your circumstance is to work with your advisor and get an illustration done, which will help determine if this makes sense for you, because it is not a tool that everybody should use. So who are the best candidates for an individual pension plan? Well, business owners and incorporated professionals like doctors and dentists over age 40. We want to make sure you've had T4 earnings for the last number of years and you have predictable corporate cash flow. The advantages of an individual pension plan are: you have higher annual contribution limits than for an RRSP. You have the ability to elect to buy back past years of service as a lump sum contribution. You can also make a terminal funding contribution or early retirement funding contribution if you retire anytime before age 71. You have predictable retirement income. You can split the income with an IPP with your spouse at any time. You don't have to wait until age 65. The money grows tax sheltered. The IPP is creditor proof. The company contributions are completely tax deductible, as are all the setup and administration fees. They are all tax deductible. And you can borrow money, the corporation can borrow money to contribute to the IPP, and the interest is tax deductible. Unlike with an RRSP, you can certainly borrow money to contribute, but the interest on the loan is not tax deductible. Well, let's look at an example of a business owner or professional is 45 years of age, and we're going to assume a 5% rate of growth. The business owner receives a T4 income of $150,000. They incorporated back in 2010, and they have RSPs accumulated of about $450,000, and they want to retire at age 65. How much more can the business owner deposit into a IPP versus an RRSP? Well, the bottom line answer is $484,000, and assuming 5%, this will result in $779,000 more assets inside the individual pension plan compared to using the RRSP. Now you're asking, why so much contribution room? Again, past service contribution, in this example, $52,000. Ongoing contributions from age 45 to age 65, you can contribute $315,000 more over that time period than you can with an RRSP. You also have the opportunity to make special contributions if the rate of return is less than 7.5%. And you have the option of an early retirement terminal funding option in addition to that. And in this case, that could mean another $585,000 lump sum that can be contributed into a individual pension plan. So that's almost $1 million. The individual pension plan allows business owners to catch up in the second half of their careers, where they have greater financial opportunity to set aside money for retirement. If you'd like to discuss if an individual pension plan should be part of your overall wealth and risk management plan, we can arrange for an introductory meeting to determine if there's a fit between your situation and my particular set of circumstances. If you like this video, give it a thumbs up and share it with a friend. And for the most complete and insightful information on wealth and risk management strategies for business owners, including doctors and dentists, subscribe to the Goldring Financial Leadership channel. Thanks for watching.